Benoit, Durteste, now please. I'd like to bring you in here to have your private markets perspective. What role can private markets play in helping pension systems deliver better individual outcomes while supporting broader economic investments?
Well, I think to answer that question, it's useful to look at what's happened in other parts of the world, and specifically across the Americas, where we've seen that pensions have steadily increased their allocations to alternatives, to private assets, which today represent typically north of 20%, in some instances up to 50% of their portfolio. So, what's the attraction of private assets for these pension systems? I can name a few. One, they're a very good diversification engine. Private assets give you access to a much broader part of the economy, particularly in areas that are less well represented by public markets. Second, there's strong structural alignment. If you think pension capital by design is long duration, and the key factor of performance for private assets is time. It's the ability to generate an illiquidity premium, and this structural alignment translates into better outcomes for investors, for savers, as well as more productive long-term investment for the real economy. To your question. And third, private assets are versatile. They're not a single homogeneous asset class. Various strategies will offer very different combination of risk return, of growth, of income profile, liquidity, such that they could be appropriate for many objectives of pensions. So you have diversification, you have structural alignment, you have versatility. Of course, at the end of the day, it boils down to performance, right? Investors do not experience asset classes; they experience performance and returns. And private market investments have a track record of delivering long-term attractive returns.
And Benoit, very quickly, I was wondering if you could maybe expand on the partnership between ICG and Amundi here, and how such partnerships can help bridge the gap in scaling private market access for retirement portfolios.
Yeah, well, I mean it's a good question. There are a number of challenges that we need to overcome, and I don't think our industry, the alternative asset management industry, has done a very good job at that so far. Which is why the partnership between Amundi and ICG is so exciting. I think we have a role to play. Very briefly, some of the challenges. I mean, the first and the main one is that private assets are fundamentally illiquid. It's a feature, as I've just mentioned, that's part of the performance generation. But of course, it creates complexity, particularly when you're dealing with investors who are accustomed to liquid solutions, liquid assets. The second main challenge is around scalability. These strategies do not scale easily, at least not when you want to preserve performance. So that's something to bear in mind. Scaling these strategy is not straightforward. They're not flow products. You require very significant origination, local investment teams, and very active portfolio management. And then that's before we get into structuring, regulation, and so forth. And so what's quite exciting is the partnership between ICG and Amundi is uniquely positioned. We bring together very complementary capabilities, expertise to try to answer those challenges, and hopefully, and for me that's a key objective, is to be able to help shape the alternative asset management industry when it comes to accessing wealth and retail.
Thank you, Benoit.